Right now, on these charts where it's zone where institutions placed all were ordered. Most retail traders look straight through it. It's called an order block. And once you can see it, you'll never look at the chart at the same way. In this video, order blocks, what they actually are, why they form, exactly how to find them on any crypto chart, and the top one mistake that makes 90% of traders draw them completely wrong. An order block is the last candle or last group of candles before price make an aggressive explosive move in one direction. That's it. That's the core idea. Look at this. Price is consolidating here, 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 and after that, boom, explosive move up. This candle right here and this candle right here is an order block. It's created by the institutions to reaccumulate their positions after the impulsive movement, where we need to fulfill the FUG, which are formed after the impulsive movement, and grab to this area, and with the best price open deal, and after that go down. So this is an example, and after this we are going to the real chart, where I'm gonna show you all the order block examples on the real chart and how to work with them, how to trade with them. So let's begin. Here we can see two order blocks, bearish and bullish, from which we can enter a good deal. And it is the top three factors which are need to include in our analysis to make successful deals. So now let's begin. With a bullish order block. To make it more correctly, we need to make this like that and this candle like that, move with both. The first factor of forming an order block is a grabbing of liquidity. So it is not gonna look like that. It will have a candle which grab all the liquidity below to get a huge amount of liquidity for impulsive movement. So here's the price, grab all the liquidity, and after that formed an impulsive movement and thought it gave to us. In this case, we are waiting for the retest of this movement, because from the definition of order block, which I told you before, we are waiting the price return after grabbing this point. So how to mark the order block? We need to take the rectangle tool and place it from the highest point to the lowest. It doesn't matter in which way with the PVG it is matter. So we need to define this candle. This candle are order block, and from that we are waiting the action from the candles. So let's make it lower, because on the lower time frames, if you see, for example, on the 1 day time frame this formation, you can always place the rectangle tool on this candle wick to define the order block and go to the lower time frames, where you can see what this zone are order block 2. But in lower time frames it's look like a candle formation, but here we can see only wick, and so from which we can enter the deal right now. We need to take the long position tool, place it from the beginning of our rectangle, place the stop loss below the end of the wick, and after that place the order block on the grabbing of liquidity. But it is the risky way. We will place a take profit on the 50% of our FUG, for example, like here, and we can get a very good deal, but don't mention the risk reward ratio. It is a schematic. On the chart I'm going to show you the better deals. And another factor of forming the order block is impulsive movement, grabbing the liquidity, and the candle need to be eaten up by the previous candle, by the next candle. So the first candle we get like that, and the next candle are going to be like that. So it is consumption candle and have our order block formed, so from which we can enter a dip. So it is all, I think, what I can you to tell on this scheme, and here we can see the bullish order block which I showed you, and now we can place a bearish EG from this spot. So here we can see a candle which were consumed. After that the price retest our order block in this sideways movement, and after that the price turned to fulfill our FUG and order block, from which we already can enter a short position with stop loss, and take profit we can place here on the this FUG or on the grabbing of liquidity. To define the better take profit, we need to look at the chart. So bearish and bullish order block always work in the same way. So now let's move to the real chart. So now we are in the BTC high time frame, 1 day time frame, and can we see the order blocks here. So the first step, we need to define the impulsive moment. So we can see it here, but the candle which were below the forming of our impulsive movement didn't grab a huge amount of liquidity, which can cause a good factor of forming our order block, so we can skip this. Here we can see a big candle which formed order block on the low time frames, as I said before. So here we can see order block which I measured in the previous videos where I talk about VG. I don't remember. So here we can see the perfectly mentioned order block. Here we can see our candle, our wick of candle, and impulsive movement after that. On the lower time frames, it's showed as lower time frame order block, the consumption of the candle and the wick from which we can enter the deal, and of course price get the reaction from it. So here we can enter a very good long deal. And now I moved to the 4-hour time frame, and here we can see the order block which I measured on the 1-day time frame. So here we can see the big, huge amount of grabbing of liquidity, and after that good impulsive movement from which after that I can enter a very good deal. And of course here we can mention this wick which grab the liquidity on the left side of the chart. All the liquidity which are found here, here, and here, and after that the price gets a reaction from it, and of course we get an impulsive movement after forming this candle. So we can see the Masons, it's a secret organization which formed the movement on the chart, and from that we can enter the deal. So for example, we can see the mimic of order block, but this is the last candle after the impulsive movement didn't create the liquidity on the left side, and we can't enter from it. It doesn't grab this liquidity which I'm showing you. It's very good, very bad. And now we can see this candle which grabbed all the liquidity on the left side, and after that something big impulsive formed, and the price get the reaction from it. Let's mark it with another color and move to the 1-hour time frame and look what formed where. So here we can see the big candle which grabbed all the liquidity on the left side, and after that consumed by the other candles, and after that the price returned to this place to fill the VG which formed where, and grab all the liquidity here, and here, and returned to the hour very good zone which I mentioned on the top. Of the best strategy to enter a good deal is a look for the liquidity zones which are grabbing by our instruments which I showed you here. Look for the VG to wait for the good entry zone. Order block is the helper to enter from the VG, and it is a formation which helped us to get a better risk-reward ratio in our deal. And of course VG helps us to define our good stop losses and take profit. Of course here we can see in our order block from which we can enter a deal all the formations of all the factors of formation of our order block are. Here is the grabbing of liquidity, the candle, and the consumption of this candle, and of course the forming of fair value gap from which we can enter. So it is not only order block. In this zone we have our PVG which are the best factor to enter a deal. So this is a zone where we can enter a deal, and if we are situated in this zone and waiting for the best time to enter the deal, we need to move to the lower frame and, for example, enter from this candle which are going to be the mitigation block. If you want to know more about the mitigation block, drop the like and I'm going to record the new video. So it is all examples of working of order block which I wanted to show you. Follow my Telegram channel where I'm gonna drop all the trading materials. Train yourself, do the backtest, and see you in the next videos.